Can I go?
No, I think I'll start off.
Yeah.
Yeah, got the clock. Ashish, Sagar, can we start? Got the clock back. Mr. C.K. Ranganathan, President AIMA and Chairman and Managing Director, CavinKare. Mr. Alok Bansal, Executive Vice Chairman, Pvt Ltd. Limited. Ladies and gentlemen, it's a pleasure to have you all with us in the 58th edition of AIMA's Leaderspeak Dialogue. In today's session, we will have the pleasure of hearing a pioneer in India's digital finance sector, someone who has redefined buying and selling insurance in the country and who continues to stretch the boundaries of financial intermediation. CKR, it is a pleasure to have you join us today, and many thanks for agreeing to moderate the session. You're a finance whiz yourself, and we look forward to an exciting session on the prevailing and the emerging trends in digital insurance. Thank you for joining us, and a very warm welcome to you. Alok, it is a pleasure to have you once again on the AIMA platform, and many thanks for agreeing to do this session. You're the Vice Chairman of India's leading fintech company, Pvt Fintech, and you have created formidable digital insurance and lending platforms in Policybazaar.com and Paisabazaar.com. Your company is among the elite startups that have listed their shares on the stock markets, and it is growing rapidly through both expansion and acquisition. Thank you for joining us, and a very warm welcome to you. Ladies and gentlemen, fintech has proved a savior during the pandemic, and it has kept the heart of the economy beating during the worst of lockdowns. Digital insurance and lending have been particularly vital for critical insurance such as auto and health, and digital lending has enabled many small businesses to tide over the cash crunch during tough periods. However, fintech has grown not only fast, but also somewhat randomly, and the sector is now coming under regulatory scrutiny. The convenience of digital finance is accompanied with questions about regulatory compliance and business practices. The traditional finance corporations are complaining about a lack of level playing field, and they are trying to contain the competition from fintech while also trying to digitalize themselves. In this session, we will learn about how Policybazaar has evolved into a key intermediary in the insurance market and how it is also turning into a competitor to the insurance companies. Also, how India's fintech sector and its regulation are evolving to improve financial inclusion in the country. With these words, it is now my pleasure to invite Mr. C.K. Ranganathan to conduct the session. Over to you.
Thank you, Rekha. Alok, Rekha, ladies and gentlemen. Bansal, it's my pleasure to have you with us. And thank you for agreeing to have a conversation about your remarkable startup and the fast evolving fintech sector in India. You are involved probably the most exciting part of the startup sector. Fintech is, just give me a minute. Sorry. Fintech is the cutting edge of the digital economy, and it is central to innovations across online businesses, including e-commerce and social media. The digitization of the finance has largely changed the way we bank, transact, invest, and insure. The insurtech part of the sector is likely to see significant innovations in the future, which will potentially have a big impact on health, mobility, business, and environment. Policybazaar.com is clearly the pace setter in the insurtech sector and is becoming more than just an insurance intermediation platform. The insurtech sector is in for a disruptive transformation as the advances in digital technologies are coming thick and fast, and the regulations and competitions are trying to catch up. Bansal, We would like you to tell us where we are in the InsurTech area and what is the way forward. InsurTech has blossomed during the past couple of years thanks to COVID and lockdowns. Policybazaar has grown rapidly during this period as the demand for insurance shot up and the insurance could be bought or sold only online. In fact, the entire fintech sector has boomed because of the wholesale shift of commerce, payments, banking, investments, and insurance online. Still, despite the ready familiarity with insurance, the popularity of insurance remains extremely low. Life insurance is mostly a saving product, and the general insurance is largely about the mandatory auto insurance and the corporate health insurance. Most individuals and the small businesses consider insurance as discretionary and avoidable cost. And even those who buy insurance remain skeptical about receiving the insured amounts, especially whether it will come easily or quickly. Consumers' distress and the insurers' paranoia ensure the insurance remains largely involuntary. Without a law-enforced or industry-driven requirement, insurance could be even harder to sell. Digital insurance has the potential to change that by making insurance more transparent, convenient, and cheaper. It is also the potential to create new types of insurance products to address a wide variety of unmet insurance needs, especially for the younger consumers. The pay-as-you-use insurance is an emerging trend in the insurance. Though it is currently applied mostly to auto insurance, one pays a lower premium for using the vehicle less and for driving cautiously. It has the potential to be used for all kinds of consumer and industrial assets. However, insurtech companies will have to convince the users to give up their privacy and agree to uninterrupted digital surveillance by the insurers and their business partners. Regulations will be critical for the growth of the insurance sector. Fintech is the most prolific zone in the startup sector and in the bellwether of the state of the digital economy. Some leading fintech startups, including Policybazaar, have gone public and their valuations are now linked to both the growth and the profitability. The performance of the listed unicorns will make a big difference to the fate of the emerging innovations economy in the country. It's my pleasure to invite you, Alok, and tell us how Policybazaar is changing the insurance industry and what we can expect to see you in the fintech sector in the coming months and years. Over to you, Alok.
Thank you, Mr. Ranganathan. I think that was a very, very apt introduction of the sector and the challenges faced by the sector over the last many years. See, before we get into specific about Policybazaar, let me just take a minute to explain how unique this product is, because sometimes from outside as a consumer we may not realize the uniqueness of this industry. So this is a product which technically can be pure digital. There is no physical good. What you customer ends up buying is just a promise. So when you're talking about promise, what is most important is actually two things most important. One, both sides represent the data correctly, which basically means that insurance companies get to understand the risk represented by the customer properly and customer understand the product properly. And second, the trust that the promise will be upheld in case required. And that creates some unique challenges. As you rightly mentioned, the products are of two types. One is compulsory products like motor, two-wheeler, or travel, where customers have to buy. And the other is discretionary, which sometimes customers may not understand the need to buy. As unfortunately, we have not been taught financial planning during our school, college days. So if we look at the total financial services sector, it needs to serve three purposes. It needs to serve for investments, it needs to serve for credit, it needs to serve for protection. And this protection bit is what we have been focused on. And unfortunately, the way industry has evolved, the focus has been compulsory products or savings products rather than the protection products. And this is something which we realized very early on in our journey. As a company, we started in 2008 June. So it's been more than 14 years now. And within first couple of quarters, we realized that the biggest opportunity is to try to solve for the financial risk for middle class India coming from the death, disease or disability of the bread earner. And there is no backup that the middle class family has against these risks. So that's when the journey started. But coming back to insurance as a product, see, this product does not have any instant gratification. In fact, the best use case of the product is if you never use the product. So that creates very unique challenges. Second, it forces you to think about negative events of life, which anyway, as human beings, we want to avoid. And thirdly, it forces you to spend half an hour, 1 hour thinking about what is the right product or which is the right company for you, which again is something which, in today's world is very tough. We don't want customers to just come and say, okay, in a frivolous manner, I'll buy whatever is available. No, we want them to understand what are the features of each product and how they fit into their financial planning. Now, if you look at the insurance value chain, it's also important to understand there are three distinct parts. The first one being insurance product itself. The second is the buying experience and the process of buying. And third is the claims. And somewhere there's a lot of stuff that needs to be done in all three. Overall, even after so many years in the industry, I don't think customers have that level of trust in terms of what product they're getting and whether they will get the claims. And that remains the biggest challenge for the industry, because eventually industry has to move from push to pull. Today, customers don't think about these products on their own. And one of the biggest wins, or if you want to understand Policybazaar in one line, that sentence would be that customers come to us. And when they come to us, that changes the whole dynamics. It means that they're in the right mindset. They're willing to spend that much effort to understand the right product. So, willing and able both are very important. And a lot of these people are able to purchase the right product because of the way they look at the pricing and the features of the products. So Policybazaar has been a marketplace. Now, if you look at any sort of marketplace, it is, whether it's online or offline, it is just a place where customers and the suppliers can come together and the transaction can take place. In our case, all of our insurance companies, all our partners are the suppliers, and consumers are the people who want to buy these products. So when they come to us, they put in their request. For some products, they may not want to engage with anyone. They can just buy, which are simpler products and people have been buying for some years. So some other products, they may want to talk to someone to understand nitty-gritties of or details of the product, and then only the transaction can happen. But let me spend a couple of minutes on each of the parts of the value chain that I mentioned earlier. See, in terms of the product, insurance sector has looked at India as a single pool of risk. Now, we are more than 200 people on this call right now. Everyone represents a very different risk. But if you're not confident of the data that you're getting, how do you price that risk? So because of the push nature of the industry, somewhere the products that were created were catering to the average risk. Now, risk as a category, actually, if you create an average risk product, it is not serving anyone's needs. When we buy car insurance today, we only answer 4 questions: make, model of the car, year of purchase, city of purchase, and did you claim last year? Now, logically, it seems very odd, right? That we don't even ask for who drives, how many kilometers you drive, where do you park, nothing. And Mr. Ranganathan mentioned about pay-as-you-go models. Now, those are very, very popular in developed world. Industry in India also have tried that in past, but there are specific challenges in terms of the hardware cost, in terms of our ecosystem where everyone is trying to game the system. So how do you then get the right data and do the right pricing? And if only people who are not driving or driving very less or driving very safely buy this, then that will anyway defeat the purpose. You have to have the right sort of, at least the minimum balance of number of people who opt for these sort of products. But with Policybazaar, that gets to change a little bit, because now customers are coming and declaring that this is who I am. And once you know a little bit about customers, you can start to create models which help you understand the risk better. So one of the products that we work with our partners on health insurance side is a 1 crore product. Now on Policybazaar, usually customers are buying a 5 lakh rupee health insurance cover. But since they were coming and declaring about themselves, and they were a very good cohort in terms of the claims on the book of business generated by Policybazaar, we could work with our partners and come up with a 20x cover, which is 1 crore cover, at a cost which is very similar to 5 lakh rupee cover. Now, this is a product which serves the need for almost everyone in health insurance in India, because 1 crore is quite sufficient for any sort of eventuality. And because the claim ratios on the book of business that we provided to the partners was lower than what they could generate from other channels, they could still afford to do a very aggressive pricing. We have started working with partners on very, very different sort of product constructs, whether it's related to diabetes, whether it's related to smokers, whether it is related to, some critical illnesses or different demographic profiles, like different age groups. And I'm very hopeful that over time we'll see very, very interesting products coming out. The sort of data that we are able to capture sometimes also helps our partners with their sort of analysis in terms of how customers are behaving on the website, or what customers are talking to us when they talk to our call center. Just to give an example, we have a very deep analytics tools which converts all of our conversation into text. And once you convert into text and you run those models on the text, you're able to capture a lot of stuff. Just to give an example, suppose a person has not declared diabetes, but when they were talking to us, they were talking about insulin. We can capture that sort of stuff and see why that person is talking about insulin if there is no diabetes. So hopefully, over the next few years, we'll see very, very interesting products coming out. The second part has been the whole buying experience, which had a lot of friction because of the offline component or physical component sometimes required as part of the buying process. Now there again, I think over the last 2-3 years, because of COVID also, there have been a push to automate as much as possible. So in health insurance now, for a lot of cases, you don't need a physical medical test. You do a telemedical and policy can get issued. Similarly, the requirement of documents and all have come down. And we are hopeful that, again, a lot of the friction points that exist today will start to go away as more and more stuff gets automated. Now, coming the most important part of the value chain, which is claims. See, claims continue to be a black box, to be honest. So there is if you look at the claim, there are 3 parts technically. One is the paperwork. Now, when a customer is in a distress, at that time, you expect that customer to go through the whole paperwork, which is not the right sort of expectation, to be honest. The second, the whole decision process of the claims. And third is the experience you get in a garage or in a hospital. Now, as a distributor, we obviously cannot decide what claim will be paid and not. But we can definitely stand with the customers in terms of helping them with the paperwork and going through the journey. So we have set up a large team where customers talk to us in case they require some help on the claim process, and we help them all through. All said and done, because we have decent volumes, it is always good to have Policybazaar on your side when you're talking to the insurance company. Now, a lot of these things that I've talked about, these are not very big or rocket science things. It's not that only we can think about it. I'm very sure industry has very smart people, and a lot of other startups who are in the similar space also understand this. But the biggest challenge is how do you get customer to yourself? And as I said earlier, I think that's the real big win that we have been able to achieve in 14 years by trying to educate the customer, by doing whatever ads we do, by trying to build that trust in terms of creating a very, very robust service system and not just a sales organization. So that's a high level nutshell of what we are. But Mr. Ranganathan, do let me know if I can help with some more details.
Yeah, thanks, Alok. I think it's very nice hearing from you. I'll post some questions to you, and I think probably that would be kind of thing besides looking at the chat box also. And there is in abroad and all the pet insurance very, very popular. In India, it's very primitive. I think it's only the cows insurance, something kind of thing, but very expensive and such kind of things. So, is there anything that is offering anything that you can give a perspective about the pet insurance, how it will happen? A lot of, if you look at the pets are becoming a very integral part of life. They are a family member. Sometimes it's a completely a soul mate for many of them. So that I think this thing is completely changing, and I can tell you a story, small story. My office building, when we bought it from the erstwhile owner, that was actually he gave the building and the property to two of its pet dogs. And as a this thing till their lifetime, the rent has to be done, the veterinarian and the people, caretaker, everybody, and all the meal, everything to be taken care of. Only after their demise, the property can be sold. So that I think I can tell you the kind of affection it is. I can see in in letter and spirit in the agreement itself. It was there in the parent document. So what I'm telling is there anything that's going to happen in India? Is what I wanted to ask you.
No, so Mr. Ranganathan, see, there are a lot of new categories like pet insurance, cyber insurance, home insurance, which are coming up. They're still very nascent, to be honest. But, if you look at the theory of insurance, it is to cover a specific risk which can be replaced in some form. Like when you look at the health insurance, why do we take health insurance? Because there's a potential cost in case there's a health issue with someone in the family. Similarly, when you look at term life insurance, you're trying to basically ensure that the family goes through the same sort of lifestyle, even though the bread earner is not around. Now, in case of pet, because pet is not an earning member, it basically means that we are treating pet as an asset. And in case something happens to the pet, you are able to replace that pet. It's not a very, very, very big demand today from consumers. There are pockets, especially in urban areas, where people want pet insurance, and some of the GI companies have come up with those products. In fact, we have launched few of them, and few of our people in our office also have bought those products. But from consumer perspective, that sort of demand is not yet there. So what do we do in such a case? See, we have to educate the customers. We can do PR, we can do some newsletters and all, or we can educate them when they come to us, or we can do some TV advertisement or some brand advertisement. Because for a product which is so nascent, it is not viable to go to TV. So we do some PR. We do try to educate customers that this is a product which is available. It's actually quite a low ticket item, so it should not be a very big decision point from the consumer perspective. But in terms of if I go back to my books where we read Maslow's hierarchy, this is a product which will come much later. Reality is that people do need health and pure term life insurance products much before they come to the pet insurance.
Agreed. When their individual needs are taken care of, then they will go to that kind of the
Exactly.
Then I would like to ask you the next question. How has Policybazaar changed since going public? Because it was before that, it was morely a private equity-led consortium kind of a thing, directing you and helping you to shape up. And after that kind of a thing, it's public, the kind of this thing, the SEBI and the other regulators coming into your kind of this thing. How is the you have been doing exceedingly well, that I know, but how has it changed your kind of this thing? Could you give a perspective?
See, to be honest, the business part has not changed. We have been very, very open with all of our investors when we met them pre-IPO, that as a company, we are not looking at what happens in 1 quarter or 2 quarters. Anyway, as I mentioned earlier, this industry takes years to move. So we are focusing on midterm and long term. We believe what is right for the company, will do that stuff. The ethos and the values of the company have not changed. Touchwood, there's always a risk that some of the senior people may move out once you have the IPO because they have made money. So that risk has been mitigated in our case where we had almost no exits. So business has continued as it is. I think the opportunity continues to be very, very big. The innovation continues to happen. What has changed is how the outside world perceives us. Now, earlier you used to engage with limited number of investors, but you can engage very, very deeply with them. You can show them much more data. You can, spend more time with them. You can have them meet many more people in the team. Now you end up doing interaction with many investors, but very shallow interactions. Usually what you get is a 1 hour, and a lot of that 1 hour is, spent on questions which may not be as critical to the business, but you have to honor investors' requests in terms of what they want to understand and where they want to spend their time. So the quality of interactions has become little shallow, but the number of interactions has become much wider. Plus, there are factors which are not in your control when you look at the stock price and all. And somewhere, because now you're getting evaluated on almost daily basis when stock price goes up or down, that is something which potentially raises some question either from investors or from media. So I think from external perspective, things have changed a little bit. But from company perspective, what do we want to achieve? How do we work with our partners? What sort of communication we do with our customers? The focus area for the company, the modes that we are working on, those have not changed at all. I think I'm very glad that the DNA of the company continues to be what it was when we were private.
Okay. The other one, the question from the chat box I would like to ask is, this is by Dr. Mukesh Porwal. Now there are a lot of competition in the fintech insurance sector, and a lot of competitions are trying to catch up with you, though you remain a market leader and continue to be holding the lion's share. And one of the ways to combat the competition is innovation and continuously coming with innovative products and so on. But they are also equally innovating of late and coming out with products, competing with you. How are you planning to compete with them in the future? Difference compared to them?
So, okay, let me again take 2 minutes to explain how at least I look at the whole insurance landscape. So any business model you look at in insurance, anywhere in the world, can be broadly clubbed into 4 categories. The first one is where insurance product is the hero. Customers end up buying an insurance product, whether it's push or pull, or whether it is retail or corporate, but eventually they are buying a product. So all your health insurance, life insurance falls into that, even car insurance falls into that, except for the first year. So in that you can be insurance company or you can be distributor. And we are a distributor. We started with retail. We are now doing corporate as well. But that's the space where we want to play. The second is where you are focusing on the bundled product or embedded product, which includes things like even first year car insurance, because you're not going there to buy car insurance. You're going there to buy a car. And car insurance is a sort of complementary product that comes along. So when you're buying a mobile phone or taking an air ticket online, you get some insurance along with that. Or you take a cab ride, you get some insurance along with that. Those are bundled or embedded products. Again, you can be a manufacturer. You can be the platform which has the customer who wants to give insurance product along with the product. Or you can be someone in between who's helping connect these two. In this, typically dynamics are a little different because customers may or may not be aware that they're buying this product a lot of times. Sometimes these are tick box and customers just pay for it without realizing they've paid for it. Or usually the claims are very, very low. So that itself means that customer does not have the need or customer does not know. The claims can be as low as 10% of the premium or something. That's the second category, which I call bundled or embedded. The third is what you call POSP, where you help agents. You don't worry about customers, but you worry about the agents and try to help them give multiple products to a customer and make their life easy, which is in insurance called POSP, point of sale person. And fourth is the services, where you're providing services either to the insurance company or to the consumer, whether claim services, tech services, marketing, some services. Now, most of the people start off thinking that they want to do one, but then they realize customers don't come to them. And if customers don't come to you, your CAC is very, very high. And once your CAC is very high, it becomes very challenging to build a business beyond a point. See, this is not an industry where discounting has been done or it's allowed. Then how do you get customers to come to you if someone like Policybazaar is there? So most of the people have shifted to the POSP model. Now POSP, again, customer doesn't know you, customer doesn't come to you, but you are helping the agents. You may call that premium your premium, but it's not your premium. It's the agent's premium. Agent knows the customer, agents own the customer. So there's a bit of difference and nuance in terms of what we do and what others are doing. We also started POSP, by the way, middle of last year. And very happy to report that within 6 months, we were India's #1. But we are very, very aware that that's not our business. That's a very different business. We always report it separately. We don't count it at in the same premium or in the same sort of way. It's a new experiment we wanted to run just to showcase that that business is actually not very tough to build. And you don't have to really spend as much to build that part of the business.
Okay. So the other question I would like to ask you, as I was in my address, I was talking about the penetration levels are very low, far lower. So, and a huge opportunity, upside is very high.
Yeah.
So given that, but there is an inertia from the youngsters and small businesses. They say nothing will happen. Hope is always there. No, nothing will happen to me. Nothing will happen to my bike, and so on. If you look at, so therefore they don't kind of think that inertia. How do you overcome? Is this thing is what, because it's a big thing. But otherwise, if you can overcome that,
it's the biggest challenge.
Very big, very big.
It's the biggest challenge, Mr. Ranganathan, in terms of what we want to do. And in a private space, most of the time when you talk to investors, they talk about something called TAM, targetable addressable market. So if you talk about TAM, it's a really big TAM, even just the middle class. And I'll maybe give some data points here. So in term life insurance, I always say, if we talk about middle class, first of all, term life insurance is not an individual product, it's a household product. But if we talk about households, middle class households, India had somewhere between 100 to 120 million middle class households. So ideally, they all should have a term insurance policy. But the number of total term insurance policies in force today is between 3 to 4 million only.
Okay.
That means that there is such a big scope. Similarly, in health insurance, the total healthcare spending in India, I guess, is about $300 billion. And not even 2.5% of that is paid by the insurance companies today, including retail and corporate. Very, 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 very low. Now, automatically that tells you that it should go up. But why isn't industry growing at 100% or 200% or 500% a year? So you are 100% right, Mr. Ranganathan. It's about inertia. It's about the trust that consumer needs to have on the industry. It's about the product innovation. So there are multiple things. I think situation is changing. If you look at the demographic profile also, people have moved over the last couple of decades more and more from smaller towns to urban centers, from joint family, nuclear family. Now, when a person is starting family and a career, they have to start thinking about insurance. And as I said earlier, unfortunately, our education system does not teach us about financial planning. So, people end up thinking about credit or thinking about investments, but not about protection as much. And as a nation, anyways, we believe that nothing will happen to us. I mean, I think general humans believe nothing will happen to them. Bad things happen to only other people. But, the basic concept of insurance is that it is for unforeseen events. Unfortunately, we all believe we are smart and we want to game the system. That's also a bitter truth. I have had friends calling me up saying that my wife is pregnant. Can we get an insurance? And we're like, this is a planned event. This is not an unforeseen event. This is not covered by insurance. You can't buy now. But people think that they're very smart and everyone else is stupid. So somewhere, I think multiple reasons, to be honest. But as consumers start to believe that they will get their claims and they come on their own to either Policybazaar or insurance company or someone, which will lead to product getting evolved, which will lead to easier buying processes. It will start to improve. But I don't expect this industry to suddenly have growth rate of 500%, 200%. I think it's a tough build in this industry.
Okay. Thanks. The other one idea I thought, if you look at our Prime Minister announced a couple of years, 3-4 years ago, that health insurance for a common man will be some 13-14 rupees, some kind of this thing. So you can do some kind of a macro level insurance, and that and government came forward to kind of this thing, insure many of them. It's a large scale sum. Is there something, just a thought? Is there something like for the small businesses? Say you give about 12 rupees, 13 rupees, or 15 rupees, because that's some money which will be nothing for them, and you get 1,000 rupees or kind of the thing insurance. Maybe worth it, and if something their outlet is gutted or fire, kind of this thing, they get reimbursed and publicized. That could also be triggered for many people to do it, because the inertia of money is only this thing. Mostly they don't have any insurance claims. Maybe as a sudden thing, maybe, I don't know. I just leave it to you as a thought. So
you are totally right. You're totally right, Ranganathan. There is a huge opportunity. See, when I talk about middle class, why I talk about middle class? The privileged class usually does not need, because they have the savings. But middle class is the aspirational class in India. They don't want to go to government hospitals. They don't want to send their kids to government schools. So, somewhere no one is taking care of them. So they have to take care of themselves. When you come to the bottom of the pyramid class, those people are okay to go to government hospitals as well, because they don't have any choice.
Yeah.
And the problem with insurance product generally is the cost of acquiring a customer and the transaction is very high. So typically you have to have a minimum ticket size. And with online, some of these things can be solved, but the marketing CAC continues to be high. The conversion continues to be very low. So eventually the total spending a company has to do to acquire a customer becomes quite prohibitive to look at very low ticket size items. And that's where I think government has stepped in, where they say, okay, for the masses, we will create some product. Insurance companies have tried to do some of the stuff in terms of creating low ticket items, but the take up is very small. Again, looking at the structure of the industry, see, customers are not buying these products on their own usually, right? So there has to be an agent or a broker or someone in between who will go to the customer and sort of push these products. Now, from the agent perspective, why should the agent spend time to sell a 1,000 rupee product when they can sell a 10,000 rupee product? Because what they get is a percentage commission. So yeah, some of these are very challenging. Just to mention, they are very good top-up health insurance plans. If you just think about it,
Agreed.
Health insurance industry has got the product totally wrong. What they cover for is first 2 lakhs or 5 lakhs. Suppose a person has a claim of 30 lakhs. The person doesn't know that he can pay 30 lakhs. But see, what person knows is how much he can pay. He doesn't know what is the total amount that he will have to pay, right? So the person can say, okay, I'll cover myself for first 1 lakh, but from 1 lakh to 30 lakh, I need the cover. That is called top-up cover. And since most of the insurance claims are low ticket, the pricing of these are very, very low, very, very low.
Okay.
A lot of these are standalone available to market, to customers. But most of the plans which get sold are the base covers, where customer knows, okay, I'll get cover for 3 lakhs or 5 lakhs. But beyond that, what happens, no one knows. So, I think, as I said, it's an evolution. It's still a very young industry, to be honest. Private players started only 2 decades back. And with, unfortunately, COVID has been, in a way, a little bit of boon for the industry, where people have started to think about these products little seriously. But you're totally right. People come to, even when you think about Policybazaar, people come to us when they see some near and dear one go through some health issue or some death in the family or something of that sort. But then they think, okay, next month is some festival, then there's a family function, and then something else, and they forgot about it. So you need to be persistent in terms of follow-up to get them to buy. And it's a tough category. It's a different category, I would say.
Okay. Thanks, Alok. The next question I would like to ask is how critical it is for you to look at acquisition for future growth and dominance?
So to be honest, we have a DNA of build versus acquire.
Mm-hmm.
So we typically want to do it ourselves.
That's cheaper.
But I don't know whether it's cheaper, but it gives us a lot of inherent strength to the business. When we started the company, we already didn't have access to a huge amount of funds. So we used to use a third-party dialer, and that used to have a monthly license fee. So our tech team came and said, why don't we build our own dialer? Now, dialer is a very specific IT company's work, but we ended up creating our own dialer, and today all our needs are served by internal dialer without spending money on it.
Mm-hmm.
So by nature, we want to do it ourselves. By nature, we want to keep it in-house. But having said that, there are specific use cases where we may want to invest or acquire. Now, you acquire either for scale, or you acquire either for capability or for team. In our case, we are clear that we do not want to acquire for scale only. We want to acquire or invest when there is a capability or a team that we believe in and which can have a potential strategic fit with our current business.
Okay, I understand.
And typically very early stage. And we want to give full freedom to the founders so that they can continue to build that business.
Agreed. And do digital insurers expect a rough regulatory transmission similar to that faced by the digital lenders?
It's very tough to predict these things, to be honest, Mr. Ranganathan, but I think there are no pure digital insurers per se. Most of the time they end up starting with the mindset that they will focus mostly on digital channel. But since, as I mentioned earlier, the customer does not come to anyone on their own, they have to revert back to the same sort of thinking in terms of partnerships, in terms of going to the agency channel or broker channel or someone else. So typically, even though we may believe that some of these insurers are more digital, they are more digital in terms of the processes that they follow or the tech that they've used to make the buying of claims easier, or having a robust IT backbone to the whole system. But there's no digital part to it. It's more tech part to it.
Okay. Another interesting question from the chat box. Mr. Nilesh Shah, Envision Capital, has asked. Nice catching up with Nilesh. So his question is, what has been the biggest challenge for Policybazaar in the last 14 years? That's question number one. The second question is, going forward, what do you think are the risks to your business?
Okay, I think if I look at the journey of last 14 years, the biggest challenge would have been, how do you get customers to you? See, I think I've mentioned multiple times now that customers don't think of these products on their own. So how do you get them to come to you is the biggest thing that continues to be a challenge even today. Apart from that, in terms of tech, in terms of AI, in terms of partnerships, everything starts to fall into place. There have been a lot of learnings. One of the learnings definitely is that you have to be very patient. You can't really push everything. Though our business has also gone through 4-5 evolutions. I won't say pivots, but evolutions in terms of how the business model looked at that point of time to what we do today. And that will continue in future. Okay. We, I think, have had our share of mistakes. To be honest, anyone who's running a startup or anyone who's trying to do something different, when they do decision making, the number of right decisions and number of wrong decisions will be very similar to everyone, and we are no different. But where a founder can make a difference is to recognize what is working and what is not working. And if something is not working, to come out of it very, very fast without worrying about some cost. I think that's something we have been able to do reasonably well. But apart from that, in terms of challenges, yeah, I mean, I can mention a few more actually. If you look at Policybazaar today, or even any time in the last 14 years, top 50, top 100 people, there have been maybe one or two people who have ever worked in the sector. When I say sector, insurance sector. In fact, all the three founders that started the company along with few other co-founding team members, we have never worked in insurance. We have even not worked in finance services. And that continues the thought process even today. When you are hiring, hire for the skills, hire for the attitude, not for the domain knowledge only. Domain knowledge can be gathered very, very quickly. So we had to build those connect with the insurance companies when we started off. And that was a big challenge in first few years. You know, we would sit outside their offices for days. In fact, the digital itself was not established. Sometimes digital used to report into tech, sometimes into marketing, sometimes into distribution. And you need to figure out who's the right person to talk to. So yeah, there have been challenges from that perspective. The period from 2008 to 2014 was a period where we had limited amount of funding available. And that itself was a challenge in terms of how do you continue to survive. But luckily, we never lost focus on unit economics. And we had InfoEdge as one of the first investors. And when we used to meet Sanjeev from InfoEdge for our reviews, it was surprising. He used to very candidly say, on the first slide, just show me two numbers, collections and cash burn. Your revenue to Excel. That revenue in Excel is not going to help you. But the collection and cash burn is what is going to help you. So we ended up creating a company which was very cost conscious, very unit economics conscious. In fact, I always joke internally that we were stingy and we have moved from being stingy to being frugal, but we can't spend money even today. So yes, there have been challenges over last many years. I think over next few years, if I look out, my hope is that the DNA of the company will continue to be same, where we put customer first and try to do whatever we can in terms of getting the right products out there, providing the best personal service levels within the constraint of this industry, because obviously we have to work with partners, we have to work under a regulatory regime. But yeah, there is no magic wand here. It's a boring company, to be honest. And I don't know whether boring good or bad, but we prefer it that way.
Thanks, Alok. So the next question from Mr. Chintan Joshi. How do you think Policybazaar will be able to mitigate the risks of increased consumerism across sectors, and especially in the financial sector? Do we need more product categories and options? If not, how as a startup you want to educate customers so that the trust is built holistically in the sector?
So I don't think I understand the word consumerism very, very well. But I'm assuming that means that impulsive buying, which happens.
Consumerism is increased activation, going to court and going to claiming their right and so on, if you look at. So that's the way I read it.
Yeah, so no, from that perspective, it's always good that consumers are more aware. You know, they are putting their money, they need to get the right product, they deserve the right service. And if the partner is not able to provide that, whether it is us or whether it's someone else, consumers have full right to ask for it or demand for it. I think it's good for the industry, because if consumers push back, industry will evolve. Today, as I mentioned, the products are generally very, very basic.
Yep.
The service levels and the focus on giving the best service level to customer has been broadly missing. See, the industry has to focus more on distributor, because distributor is that entity which controls the customer. So the focus has been distributor. So if consumers wake up and ask for something, it is going to push industry in the right direction. And I'm glad that we got called as startup even after 14 years. Recently someone asked me the same question, that even after 14 years, why should I even call you startup? And I was joking that till the time we don't have fear of failure, we should be called a startup. The day we start to fear, yes, then we become, I don't know, more established company. But yeah, till that time, we want to experiment and we continue to experiment and we give that freedom to a team. We will continue to be startup.
Okay, thanks. The other one, one more question from Mr. Arun Matthews is, hello sir, how do you recommend people in their 20s to invest their money? Also, what are your views on the REITs? Are they Right to Information Act? Is what I think.
No, this is real estate investment trust options. So REITs.
Okay.
So I don't understand these things very well, to be honest. The way I look at it, for every 100 rupee that a person has, they need to allocate that into different buckets. Now, there are three things everyone has to keep in mind when they're looking at investments: safety of the investment, liquidity of the investment, and return from the investment. So obviously, if you are looking for higher returns, it means higher risk. But a lot of times, because of the way we get influenced by social media, or even some of the startups, unfortunately, when they come to TV and talk about, I don't know, different options to invest, it can create wrong sort of impression. But a person needs to see where they are in their journey of life to look at all these three SLR: safety, liquidity, returns. Now, real estate typically is safer, but very low liquidity. Returns can be mixed, very unpredictable. FD, very different. Equity markets, very different. Debt market, different. Private investment, different. But typically, a younger person is able to take more risk because they have more time to build up the corpus. So the general suggestion has been that if you are younger, you can go for little riskier options, whether it's mutual fund equity, whether it's private investment or something else. And ratio starts to change as you start to, age up. But to be honest, I'm not an expert. I'm just giving this advice from the way I have worked on my own investment thesis.
Okay, thanks, Alok. I think we are fairly closer to the time, and I have one this thing. It is only not a question. I thought an information to you. We, as a company, we have been doing a lot of transportation, FMCG sector. I'm in FMCG sector, and we use quite a lot of across India, multiple trucks going every day and kind of this thing. So we used to have transport insurance. So underline, we used to have. Okay, so that what happened is that it used to run in maybe 2.5 crores or 2 crores, some kind of this thing based on the volume. Okay, so also that we have been doing over a period of years, and we have not evaluated. Okay, it's safe to have insurance. No, that's the way it is. So one of the executives who joined from another multinational company, he come and said, our company don't insure. So, okay, we asked them, why do you don't insure? Because that's a big risk, no? They said, at a time, a truck is maximum value is 5 to 10 lakhs. So you lose, it's only kind of thing. In a whole year, you may lose 1 or 2 trucks, if at all, any accidents or any theft or any kind of this thing. So that insurance sum is far higher. No point in insuring, because it's not one, because we have insured all at a time. So it is not kind of this thing, worth it is the kind of thing. Hello?
No, I think we can hear you, Mr. Ranganathan.
Yeah.
So you're totally right. This is a lot of organizations, when they have large scale, do self-underwriting. So I have worked in organizations where they did not have group mediclaim, but they were able to offer a medical sort of, I won't call insurance, but a medical coverage or plan for the employees because they had so many employees and they could underwrite it themselves.
Yeah, that's good.
Really, in your case, because you have a scale, you could underwrite it yourself. But for a lot of small companies who do not have scale, this becomes a very, very important product. And to be honest, in your case, also the pricing should have been properly.
Yeah,
Because, you know, if you're not claiming in the past years, or if you're claiming only a small amount, typically your premium should have come down very drastically. So maybe there's an opportunity for right sort of brokers to be able to give you the product which fits the risk that your company represents. And that's the biggest challenge, you know, somewhere the risk assessment is still in a very young industry. Unfortunately, there are no specific models. And a lot of times, if corporates have taken a policy, and don't take me wrong here, but if corporates have taken a policy, they'll ensure that at least that much is claimed in whatever way possible. So insurance companies combined ratio on corporate book is usually above 100%. So yeah, I think a lot of scope to do final pricing.
Thanks, Alok. Alok, it was very nice talking to you. It's such a wonderful pleasure, and also happy to see the way a lot of hard work has gone behind in building this one of the finest institutions in the digital sector. And I think very happy, and you have been an inspiration for many. Continue to inspire many people, and I think a lot of people jumped in after seeing you in terms of the way you have been leading in the sector, and all the best to you. And we'll be keenly watching your growth success stories as we go forward.
Thank you very much, Mr. Ranganathan. And I thank AIMA team, Rekha ji and everyone to have me here and give us an opportunity to present our story to such a large and diverse audience. So thank you very much.
Thank you. Thank you all. This takes the session to a close. Thank you all.
Bye-bye.